So Trig invests in renewable energy. We have investments in wind farms, in solar parks, also a battery storage project. And we invest in the UK and Europe. Currently, investments as well as the UK are in Ireland, in France and in Sweden. And we built up a substantial portfolio. We have in excess of 60 assets, and that's about 1.3 gigawatts of capacity. And the advantage of this scale is obviously in terms of risk diversification. The portfolio is of a significant size, so we're able to power the equivalent of 650,000 homes and avoid carbon emissions of about 550,000 tonnes in 2018. So our business plan is to hold these assets for the long term. So we're generating revenues over what is potentially 30-year asset life. Those revenues come from the power we generate, and that then results in subsidy income, which is index linked, and we also sell the power into the market. And it's the combination of these revenues that we believe will enable the company to pay an attractive return to investors over the long term. So Trig is an investment company, and like most investment companies, it hires an investment manager. In the case of Trig, this is Infrared Capital Partners. Now, Infrared has an extensive track record in transacting in infrastructure, going back in excess of 20 years. We have 150 staff. We have approximately $12 billion under management, and this brings Trig the experience and the contacts from which to source investments. It's our job to carry out the due diligence to ensure we understand the assets that we're bringing in to the company, to structure the transactions, and then to complete the transactions, all in accordance with the investment remit of the company. Well, I think a major advantage of the way that Trig manages its investments is that, as well as having Infrared as the investment manager, we also have a specialist operations manager, which is Renewable Energy Systems. Now, RES has immense experience in this sector. They've been operating in this sector for 37 years. So that's as long as renewable energy has had any commercial application. They have over 2,000 staff, and they have developed or operate in excess of 16 gigawatts of capacity within the renewables industry. So we draw on RES's deep technical expertise to manage and optimize the performance of the portfolio. And if we then take the combination of Infrared and RES and the independent board of directors that we have, who also bring expertise within the sector and oversee the strategy and the governance, I think we have a very powerful management combination, which is a major asset for the company. So I would say the fund has performed very well since IPO, and we have built up over that time a sizable portfolio which has diversification benefits when we consider the operating risks that we face around weather. We're over a broad geography. We're also invested in both wind and solar. We also operate in different regulatory markets, and we sell our power into different markets as well. I think this brings quite a lot of risk diversification benefit to the portfolio. In terms of financial returns, we started off with a 6 pence per share dividend in 2013 on an annualised basis. And this has increased year on year to 6.5 pence was the dividend in 2018. In 2019, we're targeting 6.64 pence, and this is paid on a quarterly basis. For another measure of return, if we take the combination of dividends and increase in the net asset value of the portfolio, the average over that 5.5 years up to the 31st of December 2018 is 7.8%. So the outlook for TRIG and indeed the renewable sector, I think, is very positive. In the case of TRIG, we built up a successfully operating and diverse portfolio, and we have the management skills within the company to continue to grow that portfolio given the right investment opportunities, and importantly, to successfully operate the portfolio. And in terms of the sector itself, of course, decarbonisation is becoming ever more increasing, both socially and amongst politicians. And I think this reduces the regulatory risks that we face within this environment. Generally speaking, the way in which we're approaching decarbonisation is for greater electrification of our energy usage, for example, cars being electrified, and then the provision of that electricity increasingly coming from renewables. So we're in a very good sector. Also, from an environmental perspective, which is increasing interest to investors, of course, this is a highly sustainable asset class.